everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Monday, September 9th, 2013. Well, a continuation of the trend to the upside today, and a candle that's made a higher high and a higher low. A white body candle in line with the previous white body, suggesting that the buyers have continued with some upside momentum in net terms. They've made net bullish progress on the day between the open and the close. The only worrying factor here is that it's a significantly less amount than the previous day's trading, suggesting that that momentum has weakened. Even though the momentum for the buyers is still there, it has weakened to a degree, and suggesting that there could be potential for a change of trend. We do have this largish shadow on the bottom of this candle, suggesting price rejection from this area where we had a small amount of previous resistance around the 91.75 level, and for today's trading it has held support, and this highlights, even on a minor basis, how a level can act as previous resistance and then turn into support, and this highlights it very well, with the buyers coming back in around this level. We have also seen the buyers close with control of this market, and this suggests that there is a strong possibility of this market trading to higher levels. And with the buyers taking control and the sellers losing commitment down around 91.75, there is a possibility of this market perhaps even testing up to around the top of the cloud, up to the 93.15 area. Very solid previous resistance in the recent past here at 92.21, and today the market has closed in a fairly bullish manner up above there. As I've mentioned, the reduction in the size of the body of the white candle does raise some doubt about continuation, but let's look for a potential higher high and higher low. And at the moment, as this market's trading, we're seeing the 92.21 level now hold as support, and that is crucial to this market. If we see a bearish close down below there, we could see the market testing even down to around this 90.78 level to the bottom of the cloud. In terms of the Fibonacci extension, here we're looking at the market trading above the 261.8% level. We had the bullish breakout, suggesting there was a good possibility of the market testing to the 423.6% level, and we are continuing on our way up to there, almost trading up to there for today's trading. Possibility of the market testing to there, so let's watch how the market reacts around that area, 92.61. It's rare for markets to trade up through that area, so a good possibility of a change of trend here, but what we need to do is react to how the market trades around these levels. And the Fibonacci retracement, which is in an expansive mode, is giving us a similar signal, the 423.6% level at 92.61, and a possibility of the market testing to that level, and perhaps we should watch how the market reacts around there. In terms of Ichimoku, obviously a neutral market in big picture terms, and quite a change of sentiment. If we look at all that trading down below the cloud, we had a very strongly bearish market, and now for the past 3 or 2 trading days we've seen the market closing within the cloud, suggesting a strong change of sentiment in that long-term time frame, and suggesting that there is a possibility eventually of this market breaking out to the upside above the cloud. We don't know when that might occur, but certainly in the future, if we see the depth of the cloud reduce, it may see the market break out, but we can't preempt what the market's going to do. All we know at the market is that we have a neutral market, so not a good market if we're trying to trade with that longer term time frame. For shorter term traders, the market is still trading up above the Kijun-sen, the pink line, and it is pointing up fairly sharply, reflecting solid upside momentum. Now we had a flat Kijun-sen and pointing up now, reflecting momentum to the upside. In terms of the Tenkan-sen, the green line, the market is maintaining its bullish bias in that short-term time frame by trading up above there, and quite a change of sentiment there, and suggesting that the market may trade to high levels. And with this bullish breakout up above 92.21, it does suggest that the market could trade to these levels. But if we look at this trading here in the recent past to this 93.12 level, we saw very strong rejection from this area in the past, and there is a possibility of the market not trading through these levels and perhaps seeing some selling coming in up around these areas, so we do need to be aware of that. Now 92.21, as I've mentioned, is holding a support, and if we see a bearish breakout down below, first we should watch this minor level at 91.73, and then we could see the market testing significantly lower. Looking at the Kijun-sen and Tenkan-sen, if the market continues trading as it is, which it won't do, we could see a crossover of those two indicators, but at the moment we can't go by that because this current period hasn't finished trading, so it isn't telling us a lot. But if we look at in the recent past here, as the market was trading down below the cloud, this gave us a clue that the sentiment was changing, where you saw crossovers on quite a few occasions above and below the Kijun Sen and the Tenkan Sen, and price action crossing up above and below, and then both of those indicators crossing over each other, suggesting a lot of indecision coming into this market, where he had a very strong decisive downtrend in this market, so highlighting a change of sentiment in the market. Looking over to the Chico span, that is above the corresponding price action, so it's suggesting that this market is now finding some solid bullish upside momentum, and that there is a good possibility of this market trading to high levels. And in line with the bullish breakout, or fairly bullish breakout, up above 92.21, it does suggest that we could see this market testing even perhaps up to the top of the cloud.